BMW is no longer a simple luxury automaker with predictable pricing power. The real story is that BMW still looks financially strong, still trades cheap, and still has a premium brand, but the market is pricing in a deeper fear. This business may be entering a lower return future where more capital creates less growth. That is what makes this stock interesting. It is not a collapse story, it is a durability test. BMW's recent numbers show a business under pressure, not broken. Revenue declined from 119 billion euros in 2023 to roughly 101 billion euros in 2025, while operating income fell sharply from over 15 billion euros to around 6 billion euros. Margins compressed hard after unusually strong post-supply shock profitability, and free cash flow weakened before expected recovery. The key issue is simple. BMW is spending heavily to stay competitive in EVs, software, batteries, and platform upgrades, while pricing power is getting weaker, especially in China. That matters because BMW is no longer harvesting old strengths. It is reinvesting to defend them. BMW looks cheap on traditional metrics, but this is not a classic value stock. The stock trades around 0.72 times Morningstar fair value and low earnings multiples, which suggests visible upside if recovery happens. But cheap stocks in autos often reflect structural fear, not market mistakes. For current valuation to make sense, BMW must prove that margins recover, free cash flow improves, and its next product cycle actually restores competitive relevance. If not, the stock stays cheap for a reason. The current business supports downside protection. Future execution determines upside. BMW is trying to become a premium software-defined mobility company while still protecting its combustion engine and hybrid economics. That is a logical strategy because customer demand remains mixed, and BMW's flexible production model lets it build EV, hybrid, and ICE vehicles on overlapping systems. But it is also risky because this approach requires constant capital spending across multiple technologies at once. BMW is not making one big bet. It is making several expensive bets at the same time. BMW still competes well against legacy players like Mercedes, Volkswagen, and GM in manufacturing flexibility, premium branding, and cost discipline. But the real threat is no longer only Western rivals. Tesla pressures software and EV efficiency. BYD and Chinese premium EV makers pressure pricing, battery range, and feature value. In China, BMW's strongest historical profit engine, local players are moving faster and often offering better tech at lower prices. BMW still wins on brand and execution. It is losing where technology becomes the buying decision. The thesis breaks if BMW's heavy investment cycle produces weak returns, if EV margins remain structurally below legacy ICE margins, if Chinese market share continues falling, if pricing power weakens further, or if Neue Klasse underdelivers, BMW may become a lower ROIC capital-heavy business. Another major risk is that autos are cyclical, and BMW already operates in a fragmented industry with weak moat protection. A premium brand alone may no longer defend profitability. The upside case is clear. If Neue Klasse launches well, closes the technology gap, improves EV economics, and stabilizes BMW's China position, this stock could re-rate materially. BMW still has scale, strong operational discipline, a globally trusted brand, solid balance sheet quality, and manufacturing flexibility that many peers lack. Success here does not require explosive growth. It requires restoring pricing power and proving BMW can earn strong returns in a tougher EV-driven world. This is no longer a pure luxury brand stock. It is a cyclical transition stock disguised as a value play. BMW may appeal to investors who understand auto cycles, can tolerate volatility, and believe the company can defend its premium position while rebuilding future growth. If execution improves, the risk-reward looks attractive. If capital intensity stays high and competitive pressure keeps rising, the stock can remain permanently cheap. BMW is no longer being judged on what it built. It is being judged on whether it can stay relevant. I'll break down the next one soon. Subscribe if you want to stay ahead.